Well, hey there. It's another 3 Minute Thursday. I'm Terry Sawchuk from Sawchuk Wealth, and I should start by saying Happy Thanksgiving. It's obviously a special day, and you can see in my surroundings I'm on vacation here, but I thought that I would take a couple of minutes and just share some thoughts. I don't know if you can see the water behind me, but it's pretty rough today. And actually, that's a good segue into where I think things are going here. I've been following a few things, and the one story that seems to be coming up a lot is AI. There's been some drama over the week about what's going on with the company that is behind ChatGPT. The CEO got fired, replaced by the board, then got put back, then got fired again, and now he's working for Microsoft. And so that ties into NVIDIA, which NVIDIA makes the chips that run most of the AI computing power. And of course, NVIDIA's had this amazing run up. It's a stock that makes the chips that powers AI. And when you look at the statistics on the stock, it's got some interesting numbers. It's got a PE, or a price to earnings ratio, of about 118, and it's got a price to sales of about 38. And so when you look at those numbers, they're so astronomically out of line compared to what companies have been able to support historically. And so it's funny, I plugged some data into ChatGPT because I wanted to see, would this really be sustainable, and what would it take? And just to put it into perspective, NVIDIA would have to increase their sales by 35% per year, every year for the next 5 years. They would have to increase their earnings per share by 35% per year, every year for the next 5 years. And if they did that, their price to earnings would drop from 118 to 30, and then the price to sales would drop from where it is right now at almost 40 down to 10. And if all of that happened, the price would be exactly where it is today. So the reason that I'm sharing this with you, and if you look at the waters behind me, they might look a little rough, and I think that's what's coming for the NASDAQ in particular, but probably the stock market as a whole, when we get through the end of this year into the early part of next year. One of the things that's really supporting markets are flows, and these are just rules-based investing that require big institutions to have to buy. Okay, that basically comes to an end in the middle of January. This reminds me a lot of the tech bubble in 1999 and 2000, and you all know what happened after that. So I think there's a day of reckoning coming. It's not that far away. We're happy to be sitting in 5% treasuries. With that, that's 3 Minute Thursday. Really appreciate you listening to us. And again, happy Thanksgiving, and I hope your holiday is as good as mine's going to be.